They put California in danger of losing $2.9 billion in property tax revenues and $1 billion in sales tax revenues. We're talking about hundreds of thousands of California families that are today in danger of losing their homes. More homeowners are in danger of having all of their equity wiped out. In fact, many of them are facing the consequences of owing more money on their mortgage than the value of their own property. Neighborhoods are in danger of being abandoned and creating blight in communities. That's why we stand here today to bring together some proposals, which I will let the other assembly members give you more details on. But I will outline for you the areas that we're looking at. One area of particular importance to us is dealing with at-risk borrowers and determining what lenders can really do to assist them. Now, we know that lenders on their own right now are trying to figure out, again, how to soften the blow by saying, well, you know, we won't allow the trigger on the reset of your mortgage for another 4 months or 5 months to give you a little bit more time, give you a little bit more breathing room. But that simply is slowing down the problem. Ultimately, it's going to be expressed in a very negative way. So we're going to look at identifying the problem. Two, we're banning, asking the lenders through legislation, obviously, to ban any prepayment penalties. As you know, a lot of these prepayment penalties are impacting borrowers who at the time would like to refinance their homes but cannot refinance their home because they have a huge prepayment penalty. And a lot of these secondary market loans that were done or prime, subprime loans have prepayment penalties. We want to eliminate the prepayment penalties that people have so that they can have an opportunity to refinance their home. At the same time, we want to end the incentives, and we want to end the kickbacks that spur lenders to push subprime loans onto prime qualified buyers. Yes, this is one of the realities that we had during this housing boom over the last 5 or 6 years. A lot of people who qualified for first-rate loans were giving subprime loans and told these are the loans you really qualify for. Why? Because the lenders got more kickbacks that way. The lenders got more incentives that way. And so now somebody's left holding the bag. And what we want to do is we want to put an end to all these incentives, to all of the fees and rebates and kickbacks that people in the industry get by virtue of forcing a qualified buyer for a first-rate loan into a second, third, or fourth-rate loan. Four, we want to increase counseling, counseling that can protect consumers from bad loans and help them find potential avenues for keeping their homes. And last but not least, we're going to toughen income verification regulations in the state of California. And we're going to require lenders to consider an applicant's ability to repay over the life of the loan as opposed to an adjustable rate loan that starts at 5% and then jumps to 10% within 2 years. We want to make sure that people qualify on the life of the loan, not on the 5%, because ultimately after 2 years, that person is going to be figuring out how to keep their home because they're not going to have enough money to pay that monthly mortgage. And so these are all things that we believe are going to address the problem. They won't solve the problem entirely, but given the realm of possibilities with respect to our governance responsibilities and the limitations on that, we believe that this is in scope the most comprehensive approach to dealing not only with the regional and state, but also with the national issues affecting home foreclosures here in California.